Back gang, how are you? All right, so we're looking at the daily chart for NASDAQ September delivery. And if you've been keeping tabs on me, I've been telling you that we're likely to draw down into this buy side imbalance, sell side inefficiency. So we'll look at that, add it to the chart here. So notice this area is just slightly grayed out. All right. And when we're looking at price moving down into these types of imbalances, we want to grade them. Okay. The first important thing we wanted to see was, did we get a close below midpoint of this wick, which is consequent encouragement? And we got it right there. So we knew last Thursday the likelihood it was going to go down. Next order of business is this buy side imbalance, sell side inefficiency, and this volume imbalance between the two bodies that are separated there. Even though there's wicks connecting the two candlesticks, the bodies are telling us useful information. So if we roll over here at startup at 6 p.m. overnight going into Tuesday's regular trading hours tomorrow, just be mindful of that volume imbalance. And then we have a small little fair value gap right there. Okay, so remember, I told you we would clear out these highs and then this SIBI and the consequent encroachment of this wick, and then how we left all this here. We failed to show willingness to want to go higher. Sharp displacement lower. Nothing up here is smooth. There's several pockets of inefficiencies in here. We have this big volume imbalance, this volume imbalance, and have the remaining portion of this buy side imbalance, sell side inefficiency. So I'm going to add the fib levels, drawing it from high down to the low of the volume imbalance, which is this candlestick's close. Now I'll drop down into a 1 minute time frame and get through this rather quickly. I have things I have to take care of. I had a wonderful weekend, and let's go back over here. So we had new week opening gap here. Already, so you can see that here. Make sure I have that correct. So 74.25. Don't have that on there correctly. It appears to be 74.25, right? Close. 74 even. Yep. Okay, good. Just want to double check that. Some of you hardy boys out there like to figure out the mystery of why my level doesn't jive with yours. It's the old man's eyes. It's not intentional, or is it? forced forced homework. You got to go in here and check the old man. All right. So anyway, the market opened up here at 6 p.m. Sunday morning, or Sunday evening rather, and then traded lower aggressively and rallied back up, climbed back up into a quadrant level of that buy side imbalance, sell side efficiency on the daily chart. See the background? It's a little grayed out, okay, versus the white that's over here in the price axis. Remember, we're inside that large imbalance. Market comes up, uses the consequent encouragement upper half. If it's bullish, it'll do those types of things, and it rallies up, goes into an octant, tries to rally here, fails, goes lower, trades down into 830, meander around, we rally up into Asia, we fall short of hitting this octant, we trade softer, then we get in here, we use the new week opening gap, sells off, comes down, clears out sell side, pulls right back up into new week opening gap, and notice it's around the quadrant level of that buy side value, sell side inefficiency on the daily chart that we graded out. That's what these horizontal lines are. Okay. Watch how price gravitates to them. We spend a little time here, meandering around. And finally, as we enter Europe, it's before London, by the way, the we drop down, aggressively trade to consequent encroachment, which is midpoint of that daily buy side value, sell side efficiency. Volume imbalance trades to it there. Finally, down to a lower octant, the one immediately beneath consequent encroachment. Then we come right back up to consequent encroachment. Look at this swing here. Beautiful. Then right back up to consequent encroachment. Then we get above it. And now we're coming back down into it. Here. Consolidating here. Look what it leaves. Look at that. So this already looks too suspect. Okay. They spent a whole lot of time gyrating around here. This is likely to get taken. So we have buy side imbalance, sell side efficiency, consequent encroachment right here, and then we're up in a premium with price relative to the midpoint of that buy side imbalance, sell side efficiency on the daily chart. We have relative equal highs after staying inside this range. And the market trades lower, comes right down into 7 o'clock in the morning is right there. Okay, so 7 in the morning. Let's grade that out. Sure, we have a little bit of a pop here, but that's just running liquidity. That's not a trend. Okay, there's a distinction here that you have to make, that when we're looking for the range in between 7, 9, but it did. Yes, for the first hour or so, it ran up. Half an hour or so, about 40 minutes. It ran up just to take the buy side out. So that buy side's taken. And then what does it do? It pulls right down inside of the low and the high, and it starts gyrating around its middle. So is that consolidation? Yes. How can you going to call that trend? Okay, it's not being allowed to protract. So it's consolidating. Okay. So when we get into 9 o'clock, we have several things in here with the bodies. Forget the wicks, forget all that. Look at the bodies. Okay, see that? So in and of itself, where was it made jagged? Down here. So where's it smooth? Where the bodies are like here. See that? Now, this big wick here, you gotta forget that, because that's where the damage is allowed to be done. So it's the bodies in here. So we're going to anticipate a rally. Approach 930. We rip higher. Clear those bodies. Disregarding the wicks. Because we're already above consequent encroachment of that wick. So it's no longer a factor. Okay, normally if we were bearish, we want to see it stay in the lower half of it. But we can't use that here because we have reason to believe it may go above these bodies. Because when we have a group of candlesticks like this, we want to look at where the liquidity is. And this is the extreme. Now, granted, it does get a little bit of movement beyond that. I'm not looking at that. I'm looking at the bodies here. So the higher one here is the buy side liquidity. At the first few minutes of the opening range may flutter and run above. It does that. And then right at 9:30, it took off and it gave me no chance, literally no chance to get in this. And I was sitting with Caleb this morning. I was like, look, they're going to take the sell side here. They're going to take the sell side here. And then the volume imbalance down at the low of the daily buy side and balance sell side efficiency, which is in here, this level and somewhere abouts in here. Okay. And we just immediately out the gate just fell like a elevator, just fell right out of the open and it didn't give me a chance to get short. It just moved too far and I just watched it. I told my son, I said, look, we'll likely see this become an order block and I'm going to take the 7 o'clock gradient levels off now. So now we're simply just back to price at about sell sign efficiency grading levels on the daily chart. That's what these these horizontal lines are. So as market breaks down aggressively, missed any opportunity to get in here, moved too fast, too far. I just said, look, Caleb, let's just watch this. And there was really no participation on our part. Open here is change state of delivery, trades up into it. Notice this order block, okay, is anchored and tethered to an octant. So that means this order block is a valid order block if you know where the market's likely to go. So I had a little bit lower target, and I'll go back up to the daily chart before I close and let you see it because I wasn't thinking ahead before I did this recording to tell you where they are, but I'll show you. So this is bearish order block. It trades up into it here, and then gives up the ghost, trades lower, trades down into the octant right below the quadrant level, starts to consolidate in here, and it gives us a silver bullet. Where are we at with this rectangle here? So we're going to look at 10 o'clock. Okay, we'll go to 10:30 just for the sake of marking out enough time. Take this off and that off. All right, so we're going to be hunting silver bullet at 10 o'clock. And at 10 o'clock, the first presented fair value gap is a SIBI, while the market is not allowed to go lower. Okay. We already used it here to try to sell off, but we came back above it here. This, let me highlight it. This video is already becoming much longer than I wanted it to be. So we have a bullish inversion fair value gap there. So we tried to go lower off of using this as a bearish fair value gap. It started to go lower, took out that swing low, took out the bodies. See that? Look at the body right here. And then look at that, lower. So that's a run below, even though it didn't take out that wick. Why? Because the wick is allowed to do the damage. The narrative, all of the real volume that is useful information, you can see it all in a candlestick. No gimmicks required. See that? Rallies up, comes back down in, bullish fair value gap. Look for it to trade up into this high because we have the low of this SIBI right here. So I'll draw up into that right there. So market rallies up. Why is this a fair value gap that's valid? Because this candlestick is candlestick 3, candlestick 2, candlestick 1. Candlestick 3 is tethered to that octant. That validates this as a fair value gap. It's useful. Okay. We use it here. It rallies up, starts to consolidate, trades back down into the quadrant, 0.75, accumulates, goes higher, trades up into another octant, consolidates, trades into the order block, open of this candlestick has changed in state of delivery, rallies up, hits the low of that SIBI, and then we would want to see it drop into this small little gap right there. That's the smallest little gap right before we get this run higher and drops. So if we highlight that, these are the things you're supposed to be doing with your charts, not just simply taking mine and saying, I agree with that. if you're doing that, you're not doing what's required for you to learn how to do it on your own. Okay. So that's the draw up here. And then we have the market trade around this level here, which is the low of the SIBI. This is the SIBI over here. Sell side and balance, buy side and efficiency. We don't need to extend that over because there's going to be too many things on the chart. And we'll just, there you go. Market accumulates here and pops up, hits that little gap, meanders around, hits the what's that? The upper quadrant. No, it's the consequent correction of the BISI on the daily chart. And trades up into it once more here. Look how much it sells off there. Trades higher, breaks lower, trades lower in here. Then as we close the day out, it got a little bit sloppy. So I'm tempted to see where we're going to open up at. So I'm going to hang out with you for a couple more minutes to get to the 6 o'clock restart. We have Jackson Hole Symposium Thursday. I think it's Thursday, day one. If it's not Thursday, it's Friday. One of the two. Check your economic calendar. Don't hold me to my word on that because I might be wrong. I don't trust it. But I think it's Thursday. Day one is Jackson Hole Symposium. The week that comes out, it can create little wonky things in the marketplace. You're just going to have to trade through it, I guess. You know, it's not like a FOMC or a CPI or a PPI type thing. Just expect some weird things to happen sometimes, you know, and don't over leverage this week. But all in all, the idea of the market consolidating between 7 and 9, that's the rules, buddy. And then if it's going to go down, let me go into that daily chart real quick. I'm going to highlight the volume and balance levels, and you'll see where I got it wrong. So I missed the opportunity to get in on a move I thought was going to come. Even told you about it in the Twitter space this weekend. And I wanted to see it trade down into this volume and balance right here. So I was looking for that. I think it's on the biggest. Yeah, it's widest. I wish you could make it a little bit wider than that. I would like to have certain levels like really be bolder and at least twice as bold as these are. But yeah, can't have everything, right? So I wanted to be short and I wanted to take this very gap right here that I just highlighted moments ago. I wanted this to become an inversion fair value gap. Okay, so I wanted to see it act as this. Okay, where it was bullish here, if it comes back down and order flow was bullish and we're expecting higher prices, trading here and going higher would be reasonable. But because I'm thinking it's going to go down to the volume imbalance, and this is what I was telling my son, I said we're going to go down and hit the high of that and maybe go to consequent encouragement or maybe fail to get to consequent encouragement. Either way, you can see it. I was wrong there. It never got there. So my son got to watch his dad not do too well with the NQ today. But I wanted to see it trade below that and come back up and use it as an inversion fair value gap. And I would have sold short 6 contracts there and broke lower, and then anything in here that would have created another PD array. It just moved too quickly for me. And this was the first up close candle. So we had the order block there, and you saw me march through all the rest of that stuff. So we have just a second or two. We're going to see where it open up at. Okay, we just opened. We have new day opening gap right here. So we'll mark that out. Alrighty, let's go with deeper purple. What's with you in this purple all the time, ICT? Purple rain. All right, let's see. We'll scale it down to like 20% opacity. And we'll bring that one down to, there we are. All right, so we have the new day opening gap, and looking at this looks a little too clean. It just jumped off the chart at me. So it might want to come up here and bump that. But, we're going to see if it wants to continue lower. I suspect it'll probably want to go down to that volume imbalance that it couldn't get to in regular trading hours. So just have this level here highlighted. And then that's the low of the buy side balance, sell side efficiency. If we get below that and start to really accelerate, then things could get really exciting. But that's going to be it for today. Hopefully you weren't hurt today. Hopefully you were inspired by seeing the rules I gave you. There's an algorithm, folks. Okay. I can't take you to where it's at. Okay. I can't physically place it in your hands and say, here, study this and look at the source code of it all. I can't do that. But what I can tell you is look at certain things that are absolutely not part of any other discipline out there. Okay. You see these guys making videos, you see them making posts and whatnot, saying I rebranded and renamed things. It's always been there. Nobody's ever talked about 7 and 9 and used the information of whether it's consolidating or if it's trending, tells you how the morning session is going to move. I told you this weekend we were going to trade down the lower ends of that buy side and balance sell side efficiency because we're entering into that seasonal tendency where it's likely to pull prices lower. Okay. And when we're consolidating, what does that mean? 2 pieces of the puzzle are right there for you. We're going to see big movement, one directional at 9:30. Which direction? I told you the direction over the weekend in my space on Saturday. Go listen to it. It's not that long. It's actually a really good space. But, we'll probably hindsight cherry picked that stuff too, didn't I? But I missed it today. I did. I know some of you guys like to post stuff. Man, this guy never misses. I wanted to get short there, but it just simply just tore off way too fast, left me standing there at the bus stop, and I just couldn't catch it. Couldn't catch it at all, and I just tape read with read rather with Caleb, and we just watched it drip down here. And the target I aimed for, it didn't go to that. So part of me is a little bit happy because I didn't get in. I would have been stopped out in here somewhere, most likely right there. But I think I earned the right to talk a little bit in hindsight. So hopefully, if this video doesn't take too long to get compressed and sent out there on the airwaves, just watch and see how we get these highs. Okay, if we get up here, if we get them and we start to really break down lower, just look for that volume imbalance to be traded to at the lower end of the daily buy side and balance sell side efficiency. And again, that's this bit of business right here. Okay. Until I talk to you next time, I'm going to be very low output this week. We're planning some get-togethers, so my wife's requiring my input on that and shopping, and it's just a bunch of stuff. And holidays are coming up, so there's that. It'll probably just be uploads on YouTube, 1 or 2 posts on X, and that's going to be probably the extent of it for this week. So it'll be a slower paced thing. Catch up to everything I've put out, real important stuff the last couple weeks, last couple months, really. And until I talk to you next time, Lord willing, Be safe.